Hi, Richard here on Thursday the 11th of November. Interesting times as we look at a chart of the US dollar index weekly, and you can see this very large bullish engulfing candle that's been set up this week. Of course, the week's not complete yet, so there is a bit left to trade. However, the spike low on the announcement of Bernanke's QE2 hit down to about 75.60 odd, and then sucked back up above this long-term support line, of course, which goes back to January 2008. So, very low bullishness, just like here at 2%. We're on about 3% now. So what we would expect to see if we go to the daily chart is a test here of this short-term support line, which has come down from the peak, which was up at June earlier this year. So, if that occurs, then we would expect to see, as this goes up, we'd expect gold, silver, the Australian dollar and the euro all to come off. So going to a chart of the indices now, and indeed as the US dollar has strengthened, you can see what's occurred here. We've had this doji star, a reversal. It's, in my mind, is going to definitely come back to test this long-term support line here, or trend line. It has acted as resistance for a very long time, and now may well act as support for a target bounce of up to 11,600. That's yet to occur, though. There's a lot of bad news coming out of Europe, of course, with Portugal and Ireland. All of that's just going to raise the whole sovereign debt issue again. Whether it does occur, well, we don't know, but we need to be very wary of these particular trends. On the Australian market, it's very clear what's occurred is that, on the Bernanke news, we spiked up through. We've had a bit of a reversal. It's come down. I expected it to find support off this trend line, but it hasn't. It's broken through and has come back to really the balance of this 2-month-long trend, range trading trend that occurred here. Really very difficult trend for anyone to trade except the scalpers. The MACD is positive, though. It's still in positive territory, so there's nothing to say that we shouldn't see support off the 50 moving average here, even for it to climb up and hit 4800 again, and then possibly 4886. On the financials, this is the geek, the industry grouping for the financials. I wanted to show these because it really does tell a story. There's the April high. Here's this big overlapping triangle. We'd be looking for support any moment if we're going to get it. That's the same story as on this S&P 200 or the SPY. Support, and then we'd break out here to go higher north. And the way to measure that is to take the B to A leg, or between the two lines, and then extrapolate that out. So we'd sort of be coming back up towards the 5,000 odd mark in the event that breakout occurs. But still, there's these bearish noises coming out of the US as well as out of, as I say, out of Europe. So, I'm not a big subscriber, but nevertheless, if it goes north, then we want to be able to trade it. And seeing support off this would give us the confidence to go long on the financials. But clearly, in contrast to the materials, which has been driving our market up, you can see what's been occurring. So if it wasn't for this strength, largely Rio and BHP, then our indice, the SPY, would be going nowhere fast. So what we've seen here is a spike high. This is a daily chart on the materials. It's a doji star. It's been confirmed as coming off, so I would expect this gap in here to close, and that would mean a retest of this what was a double top. We thought maybe a triple top, but of course it wasn't. It blasted through, but certainly supported about 13,400. So that would augur well for the materials sector in the event that support is found and we get this what should be a little on the indices, a wave 4 push up. That would take us into the end of the year. Like we'd be looking for a Santa rally in that case. This is the Australian dollar. Break up through the blue line, which is parity. This long-term channel line didn't quite make. Put in a little doji. Star has turned around, found support again this morning on the release of some manufacturing data at parity. Broke through to just a few pips below, 20 odd pips below, and then has reclaimed territory and is sitting at, as we speak now, it's 4:30, almost 4:30 on Thursday afternoon at just 46 pips above parity. So I would expect that to hold and this to climb up, but it is all contingent on what the US dollar does. In the event that it continues to find strength for the Aussie dollar, certainly it looks like it's going up. If it continues to find strength, the US dollar index, we'd be looking for weakness here. So looking at the euro, it's a little bit more aggressive in its volatility, and you can see that it has come up and hit this channel line here, which is equidistant to this bottom rising trend line. It has worked its way sort of through that fourth wave extreme. This is the previous fourth wave extreme over here. We got quite large divergence here. So if we look at the MACD, here's the price action high at 1.426, and here is the divergence. And if I can get a cursor going, I'll show you. Here is the divergence on the MACD, which is right in here. So what we like to see, of course, is new highs being made with higher highs in the MACD, but that divergence is really quite pronounced. You can see falling away there while the price action is going up there. So that gave us a very strong warning that the euro was likely to come off quite heavily. Moving on to gold, really strong fifth wave up. Found support off the short-term trend line, which goes back to late July this year, and shot up, absolutely rocketed up, blast through on the back of Bernanke 1400, did a spike high reversal. This is a bearish signal, but yet we've had the last 2 days just creeping back up. In the event that support is found and the broader market think that this is a great opportunity, then 1463 would be the next target for gold. As far as the commodities, so I wanted to show you the weekly chart of gold, which is one that we saw at the beginning of this trend that we initially thought was going to be a wave 2 and break down. Of course, it did not, just kept going straight up. And the broader target, this is not a perfect science, but you could lay the line there and say, well, it actually has spiked up now at 1420 odd to that upper trend channel, and then we'd be looking for confirmation and a reversal back down towards this lower channel. Clearly that's not happening at the moment on the weekly, but as we look at silver, well, that's an interesting chart, because this is a weekly chart showing what the industry generally calls a blow off. Massive high spike high there. That's a couple of $2.50 or more on silver, which is really very, very extreme. Didn't quite make this upper channel, but at the same time didn't come far off it. So you can obviously move those around to suit, but the possibility is that it could go higher. It looks like a wave 3, that extreme. It's impulsive, so the possibility is for it to track back in a messy triangle, find support, and then go up to finish the pattern, and that would be in line indeed if it does occur with the indices moving up to that Santa rally that we mentioned earlier. On oil, it's worth looking at because it's also very demonstrative of what's happening in the market. We've had a very strong run up from this sideways movement, which lasted for well over a month. Just went sideways in a very difficult trend on a daily, but indeed if you were trading this intraday, as some of these guys do, just to show you, there's very nice ranges in here, which are on 3-wave corrections, ABCs, the traders that are savvy and onto this, they're capturing those range trade trends very nicely and just taking the meat out of it before it of course broke out and has gone higher. So where's it going to? Well, you know, it really shouldn't go much higher. But the interesting thing here is that if we go back to the weekly chart, which will give you a better feel, there's the massive blow off, spike high, you know, peak oil noise, and then of course being an ending diagonal, it just simply tanked hugely in a massive way and unraveled in the space of a few months. That whole rise from early 2007 right through to mid 2008. So from, you know, just over a few months it tracked off around about $100, which made some people extraordinary amounts of money. But the point here is that the high that was made in here, which is a little bit hard to see, but at 87.18, has just been taken out. So you can just see the head of oil as we speak poking above that particular high. Now that's quite significant. If we go back to the daily chart, what it means is that you know, we could set a target. It's a belief that, you know, about the economy, where you can see it's hit the 61.8, and we'd be looking to go wave 1 to 3 here, and back for 4 down here, to push up and hit 93 odd dollars. Now if it does that and the Aussie dollar goes with it, well, that means our oil will be reasonably priced. If the euro and the Aussie dollar fall and oil for whatever reason continues to track north, you know, with the rest of the commodities, then we're going to see some pretty expensive fuel at the pumps. But that would be the target in the event that this breakup actually is confirmed, 93 odd dollars. Alright, that's it. So for more information, please go to themarketforecaster.com.au. We'll see you soon.